Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Well, the Midcap Index, that's the one to watch out for. It did recover but has slipped into the red yet again. Nifty is near the day's low, so lots happening.
You're absolutely right. It's been a very, very volatile trading session, especially the volatility has kicked in the last hour or so. But first up, let's take a look at the headlines. Stocks stay subdued over tensions in West Asia and the dimming prospects of a Fed rate cut after retail sales in USA come in stronger than expected. IT, PSU banks and realty are the big drags, even as FMCG and pharma eke out gains. Broader markets relatively outperform.
Vodafone Idea is in focus. The stock has recovered from the lows after government comes out in support of Vodafone Idea's upcoming fundraise, says preserving competition with multiple operators in the market is a major policy goal of the government.
Stationery and art material stocks such as Toms and Flair Writing surge in trade after a positive note from Nuvama. The broker says the industry is likely to gallop at a 13% CAGR to nearly 72,000 crore by FY28.
Spark under pressure after company in conference call says they are not looking at raising any equity currently, adds it will look at its portfolio to prioritize assets.
Bharti Hexacom surges nearly 6% after Jefferies initiates coverage on this particular stock with a buy call and a target price of 1,080 rupees a share.
Okay, all right, those are the top headlines, but let's quickly take a look at the markets. The Nifty is closer to the day's low, just 17 points off from the lows. It did see that lows around 5 minutes back and is off around 118 points from the highs. So the high today was 22,213 and we are below the 22,100 mark right now. So it has broken crucial support levels, the 50-day moving average as well. The mid-cap side of things, it looked like there could be some green on that particular chart, but yes, after turning into the green, it slipped into the red. Again, it is attempting some recovery from those lows. It's down just 33 right now. At a point in time, it was down around 70 odd points. So there has been some recovery. The small caps, they continue to do well. So there is some difference that we are seeing in the moves in the small caps and the large caps today. But again, the action remains in the broader markets. A lot of earnings, a lot of brokerage notes, they keep coming in.
You're right. And, like you mentioned, it's been extremely volatile, especially in the last hour. One particular stock that we could look at, before we move on to Hormaz is CRISIL. The company just declared its Q4 results. It appears to be a slightly muted quarter for the company this time around. And on the back of that, that particular stock has seen a bit of a sell-off from the green levels that it was trading in. But now moving on to our special segment, Midcap Movers, we have Hormaz to take us through the mid-caps that are moving around in the session.
Extremely choppy in the broader markets, but the small caps are in a league of their own as we speak. The Nifty IT also has been taken to the cleaners today, but we'll start off with the broader markets, the top losers. Their Spark continues to have another lower circuit today. KEI Industries is not having a good session, as is Macrotech. And as I was mentioning, the Nifty IT has slipped below its 200-day moving average in today's session, and Midcap IT is bearing the brunt here. Coforge and Infosys both seeing some bit of profit booking from higher levels, both trading at the lowest point of the day. But what is not trading at the lowest point of the day are two battery related stocks, and that continue to power from one level to another. Both Exide and Amara Raja. Exide is up 40% in the last 8 trading sessions, and Amara Raja itself 7.5% higher today, is up 20% since the start of April. Some stocks that are reacting to some positive brokerage commentary that came in earlier this morning. Varun Beverages on the Morgan Stanley initiation. It's seen a bit of choppy trade, but still holding on to some gains. Bharti Hexacom has given up some gains, but still 5.5% higher. And HDFC AMC, after the upgrade, is trading with gains of close to 3%. Some stocks that are doing well on the back of strong volumes, and those are Happy Forgings after the order win that it received. Aegis Logistics, Saregama and Dom's Industries as well, after the initiation there from Nuvama, is doing well on very strong volumes, 4% higher there. And one pocket lastly that I want to focus on, that is defense, and that is bucking the trend in a weak market today. Mazgaon Dog, Bharat Dynamics, Cochin Shipyard, Hindustan Aeronautics, all of them seeing gains of anywhere between 2 to 4% in today's trading session. So advanced decline still in favor of the advances. The specific sectors that are doing extremely well in today's session. Back to you.
Yes, there are specific sectors. It's a very stock and sector specific market. Thank you, Hormaz, for bringing us those details as always. Let's now welcome Shrikant Chauhan of Kotak Securities for a technical check on the markets. Shrikant, what's happening? Looks like market is unable to make up its mind. The mid-cap index, after recovering, has seen a fall. The Nifty has seen a fall as well from the highs. What are the charts suggesting now?
Good afternoon, Sonal. Good afternoon, everyone. I think, say, like a lot of hedging is happening in the market, and maybe that's the reason all these large cap companies are under pressure. In fact, Nifty has also broken its important support level, which was around 22,200, and now it is comfortably trading below the same. So, till the market is not again bouncing back to the levels of 22,200, I'm expecting Nifty to remain under pressure and we may see the levels of 22,000 on the downside. But at the same time, if we go through with long-term charts and extensions and retracements, then close to 22,000 levels, the market is having excellent support. I think close to those levels, we should look for taking some contra bets in the market. But at these levels, it is better to focus more on the mid-cap stocks. I think where the street is looking at.
Can't any stock specific recommendations you have today, and especially from the broader end?
Yeah, Vivek, I think all these defense related companies, they are really doing well, and we are seeing price expansion as well as volume expansion. So in that particular context, we like Bharat Electronics, which is currently around 233. It is still very close to its all-time highs, and it is consistently forming higher top, higher bottom series. I think based on its technical formation, it is heading for the levels of at least 255, 260 in next maybe few weeks or months. So it will take some time, but it's a time to buy and accumulate more if there is any correction in the stock. We also like NMDC, and there also, if we see the overall performance from all these metal companies, then they are doing really well. But in that particularly, NMDC has broken its selling pressure supply line at 240 levels, and it is trading above the same. So from here, the stock can go to the levels of maybe 270, 75 in next few weeks or months. NMDC is also a buy at current levels with a stop loss close to 225.
Okay, all right. So those are two technical picks. Thank you, Srikanth, for joining us. So that's a technical check on the markets. But with that, we'll do one thing. We'll slip into a break. When we come back, we'll be joined by management of GTPL Hathway. We'll discuss the quarter gone by and the outlook going ahead. Stay tuned for that. Welcome back. You're still tuned into Midcap Radar, and we are in the middle of earnings season. So let's get some conversations with respect to earnings going. GTPL Hathway is the stock on our radar. The company saw a revenue growth of 17% on a YY basis. However, the EBITDA margins, that is down 75 basis points on a YY basis. We have Piyush Pankaj, the CAT Business Head and Chief Strategy Officer of the company, joining us now to understand what led to the fall in margins this time around and what is the outlook going forward for the company. Mr. Piyush, good afternoon. Thank you so much for joining us and discussing the earnings gone by. I wanted to understand the outlook on margins. There has been a decline on a YY and on a quarter-on-quarter basis, which is below your expectations as well. You had indicated it could be 17 to 18%. It is around those 14% levels. What led to the decline, and what is the outlook for FY25 in terms of margins? I think...
Mr. Piyush, are you on mute?
Yeah, I think you're on mute.
Am I audible?
Yes, you are. Please go ahead.
Sorry. Yeah, so good afternoon. Thank you for giving this opportunity. Yes, you're right that I have given that somewhere 17 to 18% the margin is going to be there, but it has come down to around 15.5% on the overall. This is due to some of the non-operating revenues, which is the activation revenue and one-time other income, which has come down. If both were together, we would have 17.5%. It has come down by around 35 crores if you take the both together. But yes, we are hopeful that we are going to come back in FY25, and again, we'll achieve between 18 to 20% of the margin on the total business. But yes, I'm giving the operating margin also, which is the range of 23 to 24%, which we are maintaining from last 5 years. This year also, we are at 24% in the operating margin, which is still continuing, and we are hopeful that that will increase with the time in the FY25.
I just didn't get the operating margin number. There was some sound. Can you repeat that for us? And by operating margins, do you mean it at the gross margin level?
No, operating margin is when you are doing the net of the broadcaster's payout and you're taking out the one-time income and expenses. So it's more of what you are doing in the operation side, mainly after taking out all one-time revenue and expenses together. And you are doing, if we are doing historically at 25 to 26%, this year we did it at 24%. We are hopeful that will bounce back to 25 to 26% next year.
So with the margins bouncing back, like you mentioned, what we've actually seen is that profits been going down for the last couple of quarters. Historically, you've done a run rate of in the range between 40 to 50 crore. So when can we revert back to those levels? FY25, what would be your target in terms of bottom line?
See, this year, the profit side, if you see, we have gone down by around 5 to 6 crores. From 120 crores, it has gone down to around 110 crores, 112 crores. We are hopeful that we're going to bounce back. This year, the cost has a bit higher. As you know, the NTO3 has come and the broadcaster's cost and everything has gone up in this year. We have taken our revenue also up on that level, but still we have to do more on those sides. We are hopeful that FY25, again, you will see, we are giving consistent performance, if you see, throughout. It's in the range of 100 to 120 crores, the 125 crores, the profit. And we are hopeful that this will improve from here onwards.
Okay, so you are saying 100 to 125 crore rupees has been the profit range and you are going to improve in FY25 from those levels.
That's right. That's right. If you see from the last 3 years on the annual basis, we are at that range on the consolidated results.
Okay, take that point. Let's talk about the cable business, TV. That one has grown at a healthy pace. But again, the margins are here under pressure. Is it because of the same reason that you explained earlier? And what is the guidance in terms of subscription revenues and also margin guidance for this particular business?
See, in the entertainment side, if you see the technology developments and all, it is putting the pressure on the business and especially on the margin side as the advent of OTT and other mediums in the market. That is impacting the whole situation on the ground. Yes, we are able to increase prices, but the constant price increase in the content cost on the input cost is one of the things which is the challenge which we are facing in the whole industry is facing that issue. But yes, through the consolidation of industry, because in the cable it's still around 40 million subscriber bases with the smaller MSOs, we are consolidating industry very fast and we are growing on that level. As we grow, we can increase the ARPU in the market, which is our intent, and match the margins and everyone in the coming years. So that's on the intent we are working. Yes, we have added around 600K subscriber base in this year. Next year also, the plan is that around 1 million net subscriber base to be added and at the good ARPU. So that's the way we are working towards, and we want to maintain. And somewhere we have to transform the company. We have to start providing more of the services on our angle. We believe that we are like a pipe which is going to the home, and we have started providing cable TV, broadband. We have just started OTT. We have to provide gaming. We have to provide TV everywhere. We have to provide other services with going forward layering of the services so that we can increase the ARPU or you can say the takeaway from the home and provide all the products which is required at the home at the consumer.
Yeah. One more question, if I could interrupt you there. When you're talking about ARPU has been quite steady over the last couple of quarters. You've, at least for the time being, you seem to have ruled out raising prices. So can you give us a sense, will most of the revenue growth come in largely from adding subscribers? You've also indicated that you expect some consolidation in the market. So are you on the lookout? Are you on the prowl for going ahead and adding a few MSOs?
Yeah. So last year we did the one merger, or you can say one acquisition of the Metrocast, which is of 500,000 subscriber base. Same way we are looking forward for more acquisitions in the market of the smaller MSOs. That is one. Second, on the ARPU side, we have to play in such a way that the consumer should not get threatened and they should take those as per the market. They can absorb those increases. So that's the way, and that will come with as you do the expansion, as you go away with the competition, you have a dominant market share in the whole. So that's what we are trying to do. We are number one MSOs, and we are far away. You can say far ahead with others MSOs. So that's what we are looking forward. That will increase the gap, become more reliable, and which will help us in increasing the volume and value.
So you've identified any targets? Last year you had one successful acquisition. Any targets you've identified for FY25? And what will be the likely size of any acquisition that you do?
Yeah, targets are in the pipeline. I will say it is from 200K to 700K, 800K subscriber base. There are pipeline which is there. Last year also we did smaller acquisitions also. It's like somewhere the smaller MSOs of 75K, 100K we did it, and through that we have increased to 600K subscriber base. This year also the plan is that already deals are going on in the market. We'll see that once you conclude that we'll announce that.
And we'll touch base with you when that happens for sure. Mr. Piyush, I also wanted to understand, you did indicate that you are looking at a number of factors when it comes to price increases. Do you think in the near term, in this calendar year, there is a price hike which is on the annual, considering that you are saying you're number one in your own geography or your own market?
Yeah, we are planning that, and we will do it very shortly. Some of the price increase we'll do in our strategic markets where we are dominant, and so we are going to do that. It's price increase and ARPU increase in the market.
Okay, give us a sense of the capex outlay you have for FY25. How will this be divided between the cable and the broadband business? Expected asset turn, and how do you expect to fund any capex plans that you have?
Yeah, so we did around 396 crore of capex this year, where 200 crore has gone into the cable business and 196 crore has gone into the broadband business. That's the outlay. Every time we are giving that, we are going to do around 400 to 450 crores of capex in the thing. The main it's happening through the internal accruals, as you are seeing that we are making around 511 crore of this EBITDA this year. Last year it was 516 crore. So around 500 crores of cash which is coming into the company. We are doing it through internal accruals, and we are not. So that's the way we are funding our growth.
Okay, all right. Thank you so much, Mr. Pankaj, for joining us today and giving us all those details. So that's the word coming in from GTPL Hathaway, the reason for the decline in EBITDA margins. But going forward, they expect margins to be between that 17 to 18% mark that they had guided for, and decent subscriber addition as well. The stock did see a spike from the lows, but again, it has slipped into the red. And that has been the case for the market as well, because Midcap Index that recovered from the lows is in the green right now, up around 50 odd points. And that has been the story, right? The volatility that we are seeing in the markets today. But we'll slip into a break now. As we do that, we have an announcement to share with you all. We are launching CNBC TV18's first ever live personal finance webinar, CNBC TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she'll be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There's lots to learn and lots to do. Whether you're in your 20s, 30s or even 40s, this live webinar is for you. We have limited seats, so do not miss this chance. Register now. Scan the QR code to register or log on to cnbctv18.com, and we'll see you on 11th May.
Welcome back to Midcap Radar. The volatility continues. The Midcap Index now once again trading above the flat line, and the small cap index continues to hold up with minor gains. What's actually dragged the market are actually some of the large cap IT names. So Infosys are currently trading with a cut of almost 3%. The stock, however, that we are focusing on today, or the stocks rather, are the stationary sector stocks. So both we are looking at DOMS as well as Flare Writing, both of which are surging after Nuvama initiated coverage with bullish calls on both of the stocks. In our segment Midcap Spotlight, Vamakshi will focus on these stocks.
Well, absolutely. A bullish note coming in from Nuvama on these stationery names. They have highlighted that the global stationery and arts industry could post a CAGR of almost 2.8% over the next 5 years, while on the other hand, the Indian market is expected to grow at a much faster pace. In fact, it is expected to gallop by almost 13% CAGR to 71,600 crores by FY28. An additional trigger to that will be that large MNC stationery players have now started sourcing from India, particularly as the supply chains diversify away from China. Writing instruments, which is a part of this overall stationery market, is expected to post a CAGR growth of almost 16% and grow to almost 27,700 odd crores by FY28, thus making it the fastest growing segment within this space domestically. Overall, they prefer DOMS and Flair within this industry, which is why they've gone ahead and initiated coverage on both of these counters with a buy rating. They like DOMS because the company has posted strong growth. They have high brand recall, they have integrated manufacturing facilities as well as a partnership with Fila. So on the back of that, they expect the company to post a revenue CAGR of almost 25% and a PAT CAGR of 35% till FY26. As far as Flair is concerned, they believe that the company does have a very strong market share. They have large distribution. They have posted consistently high profitability, and in fact, they plan to diversify into adjacent segments as well. So on the back of that, they believe that the company could post a PAT CAGR of almost 15%. So overall, for the DOMS, the target price is at 1,944 per share, which values the stock at 50 times FY26 EPS. For Flair, the target price is 463 per share, valuing the company at a lower multiple of 24 times, and thus a premium for DOM that Nuvama has given is mainly led by the superior growth prospects for the company. But nevertheless, Nuvama appears bullish in both of these counters, and as a result, both of these counters are trading higher today.
Oh yes, in an otherwise weak market, we are seeing some action in these two stocks. But Vamakshi, stay on. You're also tracking Jio Financial Services and Transformers and Rectifiers India. What's driving these stocks?
Well, positive developments for both of these counters. For Jio Financials, they announced that they will be forming a 50-50 JV with BlackRock, and they will be undertaking wealth management as well as brokerage business in India. So positive development out there for Jio Financials, and as a result, the stock is trading higher in the trading session today. But apart from that, Transformers and Rectifiers, they posted a good set of numbers in the third quarter. But today, there's another positive announcement that is driving the stock higher, and that is that Gujarat Energy Transmission Corp, or GETCO as we know it, has withdrawn the stop deal with immediate effect. Now keep in mind that the company had received a stop deal notice from GETCO on July 19th, 2023, and GETCO back then had decided to stop dealing with the company for 3 years. After GETCO has now withdrawn the stop deal, the company will now be eligible to supply products, and in fact, on the back of that, some order flows could also come its way. So positive development out there for Transformers, and as a result, the stock is trading higher.
Thank you so much for that, Vamakshi. Stock hitting the upper circuit today. But one stock that we want to focus on that's seeing an unusually strong move today is Cafe Coffee Day. The stock is up nearly 13% today and up 45% in this month so far. Mangalam tells us what's unusual about the surge in the stock price today.
Well, what's unusual is that it's up 13% today, up 45% this month, and this year itself, and we are just done with the first quarter of this year, calendar year, stock is up over 120%. So unusual is the move that the Bombay Stock Exchange has also put it under the additional surveillance measures or ASM list for this unusual move itself. In the last week, the exchanges asked the company as well what explains this sort of move backed by volumes as well, to which the company said that, this is purely due to market conditions and market driven. The management of the company is in no way connected with any such movement in the price. So I looked at some of the fundamentals of the company. Earlier in this month, as the financial year ended, the company reported to the exchanges the disclosures coming in from the lenders, where nearly 434 crore worth loans and interest payments were defaulted upon by the company, to which the company said that this delay could be in debt servicing due to liquidity crisis. As of December 31st, 2023, the company has loans worth nearly 1,350 crores. So what explains this move? Well, looks like some of the fundamentals of the company are working for it. For the first 9 months of this year, while the revenue of the company has grown by 14%, the EBITDA has actually jumped by 60%. The company has been working towards reducing their debt and finance costs, which have been reflected in the first 9 months as well, where the finance cost has come down from 58 crores to 37 crores. Additionally, they also sold their corporate office for a profit of around 55.8 crores. So that would work in fixing their liquidity issues. This is something that the street is looking at. Then they also shut some of their non-operating stores. So if you look at the Cafe Coffee Day outlets over the last 1 year or so, they've reduced from 480 to around 454. Whereas the business which is doing well for them, which is the coffee vending businesses at offices, out there they've increased the outlets from around 46,700 to close to around 52,600 itself. So curtailing of not performing businesses and adding performing businesses has been doing well for them. In all of this, what is important to track? One, steps to improve the liquidity of the company and reduce the debt. Secondly, improvement in in-store metrics for Cafe Coffee Day and growth. And thirdly, the impact of Starbucks, Third Wave, and all the other coffee players which have entered the market right now. Remember, the enterprise value of Cafe Coffee Day right now is close to around 2,500 crores, a lot lower than the other listed QSR players and the valuations that the street is ascribing to Starbucks. It has valuations on its favor, but a lot of liquidity related issues. So those are a couple of things we'll be watching out for.
Thank you so much, Mangalam, for that deep dive into CCD. The next stock on our radar is Vodafone Idea. The company is looking to raise up to 18,000 crore via the FPO route. The government has come out in support of Vodafone Idea's upcoming fundraising. Earlier today, we also spoke to Balaji Subramaniam, Vice President at IIFL Securities, to get his outlook on the FPO. Listen in to what he had to say.
Of course, there are a lot of moving parts, and if some of these things don't materialize, then probably we won't see a lot of upside on the table. So there are a lot of moving parts. So if one is willing to believe that all these things will fall in place, then yeah, of course the stock can trade at it can trade at higher prices in the interim. So nothing prevents that from happening.
Well, the next stock on our radar is Spark. The company has seen multiple lower circuits. Yesterday evening, the company held a conference call after it decided to close PROSEEK study of vodobatinib last week. Remember, vodobatinib is one of the flagship assets of the company and is also being studied for leukemia in the oncology domain. Ekta has the highlights of the management commentary from last evening.
Thanks for that. Well, yes, Spark, the overall conversation and the conversation between analysts as well as the management was quite subdued, and there were no real near-term triggers which were highlighted in the conference call. So I think that's one of the reasons why you're seeing the stock down in today's trading session as well. They have mentioned that they will look to at their portfolio to prioritize assets. They will look at out-licensing or partnership opportunities. In the process, they are currently in the process of reinstating the business development activity when it comes to vodobatinib and the study for leukemia. They will be looking to possibly license this particular drug in the near term for leukemia. The market size is, however, smaller as compared to Parkinson's, what it was being studied for and what it did not meet in terms of a successful endpoint. The cash balance is around $20 million. They will not be looking at raising equity as of now. They will be looking at factors such as cutting the cost structure of the company in order to make it leaner.
Thank you so much for that, Ekta. The company not being able to meet the endpoint guidance in the trial continues to weigh down on the stock. But that's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.